Let's talk about what happened with Airdrie Real Estate and why this market is starting to shift in ways that we haven't seen in a long time. For years now, Airdrie has been playing catch up. Low inventory, high demand, price, acceleration, the works. But June came with a twist. Sales in Airdrie dropped, and not just a little drop. We saw 164 total sales in June. That's a significant pullback, especially for detached homes, which have been leading the way in recent years. Now, that might not seem like a big headline number at first glance, but when you stack that up against 324 new listings that came to the market, that story starts to shift. Let me break that down. That's a sales to new listing ratio of 51%, the lowest that we've seen in June since 2018. This ratio is crucial because it's one of the clear early indicators of a market swing. Below 60% and we're entering a balanced territory. Below 50%, that's a buyer's market. And even though we're not there yet, the fact that Airdrie dipped to 51% means one thing: buyers are getting a ton of leverage back. The influx of new listings combined with the slower sales has pushed months of supply over that 3-month mark for the first time since 2020. That's a massive shift when you consider where we've been. Just earlier this year, Airdrie inventory was sitting near historical lows, a lot of times under 1.5 months of supply. That means homes were flying off the shelf, often with multiple offers and very little negotiating room. But now, there's breathing room, there's selection, and most importantly, there's negotiating power for buyers that didn't exist 6 months ago. The benchmark price in Airdrie for June came to $538,300. That's down almost 3% compared to June in 2024. This marks the second consecutive month of a price decline, and not just across the board. Detached homes are the main driver here. They've seen the steepest drop both in sales and price pressure. For context, back in April, we were sitting near $555,000 to $560,000 range for detached benchmark. Now we've slid $20,000 in just a 2-month window. Now, before sellers panic, let's keep perspective. Airdrie is still up significantly compared to pre-COVID pricing, and year-to-date averages still show strong appreciation over a 3-year window. But the days of aggressive price jumps every month, those are behind us, at least for now. So what's causing the slowdown? Realistically, it's not just one factor, it's a few different conditions. The first one is interest rates. Even though the Bank of Canada cut rates by 50 basis points this year, mortgage rates are still a little sticky. Most buyers are still looking at a 5-year fixed term in the 4 to 5% range, depending on the lender, and variable isn't much cheaper. In terms of the affordability ceiling, we've likely hit that pain point for a lot of local buyers. Airdrie has always been seen as that affordable alternative to Calgary, but when your average detached home climbs into the mid 500s, the affordability gap between Airdrie and Calgary starts to shrink. People are starting to weigh their options, especially with so many employers bringing everyone back to the office. There's also been a massive pullback in investors. For over 2 years, Airdrie was a prime investor market. Cash flow was possible, tenant demand was high, and prices were still relatively low. But rising operation costs, everything from insurance to taxes to maintenance and slower appreciation projections and higher vacancies have caused a lot of investors to hit pause. There have been a ton of sellers rushing to the market, and this is huge. A lot of sellers who were sitting on the sidelines in spring saw prices peak and decided now is their time to cash out. That explains the 324 new listings, many of which are very similar products, a 2006 to a 2015 built 2-story home with moderate upgrades. That's created a ton of competition, and that's not considering the multiple new builds on and off the market with several new communities that are still being built out. All right, if you've made it this far, you clearly are into this content, so do me a favor. Hit the like button, helps more people see this. And if you want more straight to the point real estate insights without the fluff, make sure to subscribe. I drop videos like this often, very often. I'd actually drop it more if I had more subscribers. So thank you for subbing. Now let's look at the different segment types. For detached homes, sales are down hard. Inventory is up and prices are correcting. The average days on market has jumped from 18 days in April to 31 days in June, and that's quickly growing. And this is where most of the pricing pressure is being felt. For semi-detached homes, they're holding up a lot better, but they're still seeing softness. The value proposition here is still very strong. A lot of these semis are listed below $500,000, which opens up the buyer pool. Expect slower declines here compared to detached homes. Shockingly, townhomes are still moving, especially the newer ones built after 2015. Entry-level buyers and downsizers still continue to prop this segment up. Builders are offering incentives, which is putting pressure on resale. The apartment volume still remains low, but the segment still has upside. The average condo sale in Airdrie is still under $290,000, making it one of the last affordable entry points in that Calgary region. We still expect stronger investor interest here in Q3 and Q4. Now, let's not forget about the builders, because Airdrie is a construction hotspot, and a lot of the developers and builders have really ramped up inventory in communities like Southwinds, Bayview, Cobblestone Creek, and Midtown. You can see that there's been a market shift because we're seeing aggressive buyer incentives again. Free basement packages, landscaping credits, mortgage rate buydowns, and more. This puts even more pressure on the resale sellers, particularly for homes under 10 years old. If you're listing a 2015 built detached home and you're competing with a brand new one just down the street offering incentives and warranty, you're gonna be in for a fight unless you're priced super tight. The second half of the year could go a few ways, but here's the most probable scenario. Buyers will come back slowly, especially as the rate cuts accumulate. Another Bank of Canada rate cut in September is fairly likely. Inventory will remain elevated, especially through summer months, but if we see a flood of listings come at the end of Q3, could spell trouble. Prices will stabilize, but we may not see upward pressure again until Q2 of 2026. Investors will trickle back in, especially if condo prices stay flat and rents keep rising. So should you be buying right now? Honestly, this is one of the better times in the past 24 months to buy an Airdrie, especially if you're looking to upsize from a condo to a townhouse, get into a detached home for under $600,000, negotiate with motivated sellers, or take advantage of builder incentives. We're entering a window of opportunity. The trick is to be selective and run your numbers properly. Don't just chase overpriced listings. Should you sell right now? Well, that really depends on your motivation. If you're cashing out, downsizing, or relocating, yes, list now, but price competitively. The area of shoot for the moon pricing is over. The homes they're selling are the ones that are priced right and presented well. If you're on the fence and you don't need to sell, it might be worth holding off until we see more rate relief and buyer demand in spring of 2026. The Airdrie market is in transition. This isn't a crash, this isn't a panic, it's a normalization, and frankly, it's overdue. For years, Airdrie was one of the fastest appreciating markets in Alberta, and now it's taking a breather, and that's not a bad thing. It's a buying opportunity for the right people and a pricing reality check for sellers. As always, if you want to break down the numbers for your specific neighborhood or get a custom strategy for buying or selling in this shifting market, feel free to reach out.